Let's turn our attention to MMI Holdings now. The company has a market cap of 25.4 billion rand, a dividend yield of 6.24% and a PE ratio of 13. Chris, they came out with a pretty impressive set of results for the year end June 2011. And the real question now is on the national health insurance and how that's going to impact the company. If South African consumers are going to be forced to pay into the NHI, what are the chances that they're going to keep their private health care?
Rafila, I think we have to get that into some sort of perspective. I mean, yesterday in the medium-term budget policy statement, we got a little bit of a smidgen about NHI. And I think we have to come to the harsh realization that as much as I think we'd probably all like to see an NHI, it's going to take some years. Probably, I think the timescale, I think, was at 14, 15 years. So, yes, it's going to happen. And yes, people are going to have to pay an awful lot more. But I think it's going to be phased in over such a long period of time that your private healthcare companies are going to have a long time in which to adapt. So I don't really see too much of a problem, at least in the short term.
Well, Discovery echoing the same sentiments, Chris, saying that the focus is going to be more on hospital infrastructure rather than medical aid contributions.
Yes, absolutely. Look, the hospital infrastructure here is not in a good situation at all. The private hospitals have not been allowed to build new hospitals. They've pretty much cannibalized each other because of government regulation. They haven't come to the party and built new hospitals because it's been a very, very difficult situation in which they've been put. So that side is going to have to improve significantly over the next few years. People are going to have to feel confident that when they go into an NHI hospital, they're going to come out and they're going to be well looked after. So yes, there's a whole bunch of infrastructure that's going to take place. Companies like Discovery on the admin side, MMI, I think they'll do extremely well out of it because whichever way you look at it, it's going to have to be a public-private partnership. It is far too gargantuan a task to be handled by one single entity, i.e. government.
Well, just staying with that regulatory outlook, Johny in Cape Town, let's touch on SAM, the solvency assessment and management requirement that's been suggested. And that basically requires insurers to hold more capital and align their capital requirements with the underlying risk that they carry in order to be able to meet claims should policyholders suffer losses. Does this not raise the concern that insurers will sit with lazy balance sheets, especially given the fact that MMI in particular is sitting with over 3 billion rand in capital?
Yeah, I mean, SAM is sort of quite a complicated change to the current capital adequacy requirements of the insurers. It will typically increase the minimum amount of capital that they will need to hold. Previously, the life companies have held significant buffers over the minimum. So, I mean, I don't have the MMI numbers at my fingertips, but I would think sort of 2.5 to almost 3 times the minimum. So the minimum will go up, so they'll still have a buffer of, let's say, 1.5 times. Will they hold too much capital? Generally, my analysis of life companies is they seem to sit on excess when markets are very buoyant, and then when markets get depressed, like we saw in end of 2008, beginning of 2009, then people are saying, well, they don't hold enough capital. So generally through the cycle, I think MMI is pretty well capitalized. There shouldn't be any issues coming out of SAM, in my view.
Outside of the insurance business, Johny, obviously they have Momentum Investments. They're sitting with an asset under management figure of 320 billion rand. Now, Coronation today came out with a positive trading update. And my question is Coronation in a league of their own, or is Momentum Investments also going to be quite a key player to watch? And the second question is, how do you feel about the strategy of not focusing on growth in AUM, but rather moving away from the low-margin fixed income business towards equities?
Look, I think Momentum Investments, which is the merger of RMB Asset Management and Metropolitan Asset Managers, is sort of a world apart from Coronation. I would say Coronation has definitely been a success story over the last 4 years, growing assets from 100 billion, like you said, up to sort of 300 billion. RMB AM and Metam have really gone the other way. They've suffered outflows, staff losses, etc. So they really need to try and sort of consolidate that business. And they'll need at least sort of a year or two to try and get a stable team and performance right.
Chris, how do you feel about the company's dividend policy? They paid out 105 cents, up from 65 cents last year in the year end to June 2011. And in terms of the dividend policy, are we likely to see a change in that? Because Momentum traditionally was a massive dividend player before this merger with Metropolitan to form MMI.
Look, the impression I get is we're going to still keep seeing a nice dividend coming through. I mean, on the kind of dividend yield we're looking at, what, 6.2%, it's very, very chunky. And that must be one of the reasons why an awful lot of investors actually buy this stock. So I think they'll be under a lot of pressure to keep that dividend pretty high.
So pressure to keep the dividend pretty high, and obviously investors feeling attracted to that dividend. Do you think MMI is attractive? Hot or not for you?
No, generally speaking, we're not wild about insurance companies. We see them largely as being a proxy, for the market in many ways. And so at this point in time, again, good company, well capitalized, but I don't think we're going to see any startling performance out of it. So again, coming back to that categorization of Hot Stoxx, no, unfortunately not.
Not hot for Chris. Johny in Cape Town. Chris is saying that it's not going to shoot the lights out, and he says that insurance companies are not attractive. How do you feel? Hot or not, MMI?
Well, post the results, we actually saw a bit of a pullback. So the results were strong, but actually disappointed the market. I think the market was looking for much better performance. So you did see the stock sell off, and including the pullback that we had in equity markets. And we did actually add some MMI to our portfolios. At that stage, the sort of rolling dividend on a 13, 14-month basis was around 11%, and that's not really an opportunity that can be sneezed at. So if it goes back to those levels, we would look to add again.
Fantastic. Let's come to the guest hot stock picks now, and we'll start with Johny in Cape Town. What have you chosen as your hot stock for tonight? I am a little bit surprised that you have gone with Investec, given some of the concerns that you raised about the stock earlier. Tell us why you've chosen this as your stock pick.
I guess we've talked about Investec before on this show and others. In our view, it just looks very cheap at these levels, and on a 3-year view, I do think you're going to get a re-rating out of the bank, and added to that, you've still got a very good asset management business, almost on par with Coronation, but not attracting anywhere near the kind of rating that Coronation is trading at the moment.
Thank you, Johny. Well, Chris, we know how you feel about Investec, and you've chosen Sasol as your hot stock for today. Tell us why.
Sasol has come through the past few years, well, particularly the past year, and produced a great set of earnings figures. I think, given the fact that it's very sensitive to the rand-dollar exchange rate, and I think we're now starting to see the rand getting a bit more structural weakness coming in play there. On the oil side, I think the oil prices stood up remarkably well, given the kind of volatility we've seen in global economies. And I think Sasol, as I say, has managed to come through all of this looking very, very good. It's got new management at the top. I think David Constable, I went to the presentation recently, very impressed with him and his management team. So I think you combine all of that with world-class technology, with a lot more headspace as far as using that technology is concerned. To me, it actually looks very hot indeed.
Very hot indeed. Johny in Cape Town. Ordinarily, I would ask my co-host Simon Brown how he feels about the guest stock picks. Would you like to give us your comment on Chris's stock pick, which is Sasol?
I mean, last year it was trading below 300. We added to our position in Sasol. I tend to agree with some of Chris's comments. Up at these levels, it's reasonably priced. We wouldn't necessarily be sort of buying it aggressively, but it's reasonably priced.
Wouldn't be buying aggressively, but reasonably priced is the comment there from Johny. Chris, I can see you giggling away.
Yeah, look, I mean, it's not so long ago that Sasol was around about the 500 rand level. Okay, that was in the heady days of 2007, 2008. But I think it's got so much going for it now at this point in time that I think it's going to continue to perhaps surprise the market on the upside.
Nothing is going to sway you away from Sasol by the looks of things.
We like resources stocks generally, and Sasol really fits the bill.
Fantastic. Thank you very much. Well, that's it for Hot Stoxx. Thanks again to our guests, Chris Gilmour from Absa Investments, who joined me here in studio in Johannesburg, and Johny Lambridis from Element Investment Managers, joining us from our studios in Cape Town. From me, Refilwe Sisiane, and the rest of the Hot Stoxx team, it's goodbye till next time.